1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2. 2 step forward, 2 step back, 2 step forward, 2 step back. All right. What is the title of this video? Hello traders. The title of the video is how to use a past price action to forecast a future price action. So you may be wondering, George, what's wrong with you? Why are you saying 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 2 step forward, 2 step back, 2 step forward, 2 step back? So you may be wondering why, okay, what's wrong with me, or what is right with me, or what is happening, all right? But it's something to do with the tutorial about using the past price action to forecast the future price action. So allow me one more time to do this exercise, okay? All right? 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 2 step forward, 2 step back, 2 step forward, 2 step back, 1, 2, 1, 2, 1, 2. So now what I'm trying to do is to get your attention, because if I start now saying again 1, 2, 1, 2, all right, you can now forecast how I'm going to end my 1, 2, 1, 2, 2 step forward, 2 step back. So because I've said it many times now, I say 1, 2, 1, 2, 1, 2, 1, 2, 2 step forward, 2 step back, 1, 2, 1, 2, 1, 2, 2 step forward, 2 step back. So if I keep saying that, the next time I start 1, 2, you can just say everything that I'm about to say. And you may say, Joe, I already know what you're about to say. And the same thing is happening in the financial market, but I wonder why people cannot see it. There is nothing new in the financial market. What has happened before is likely to happen again. Either we keep our ear wide open, as you did now when I was saying 1, 2, 1, 2, 1, 2. You can quickly pick up few things, but you need to train yourself, all right? And it will take some time for some trader to get to a point when they can quickly look at the chart and see what is happening here, and use the past price action to forecast the price action, the future price action. So for this talk here, okay, we are looking at what are we looking at, my friend? Is it Aflac Incorporated? Is my pronunciation correct? AFL. My friend from America, is it Aflac Incorporated? I'm speaking to you, all right? So the epic is AFL, all right? So look at it, all right? Look at the past price action. So if I'm talking about today, so I'm going to put a vertical line on this chart, and I'm going to 2018, starting here, put the dash there. So we will use everything behind that red vertical line as the past. So look at what has happened in the past up to that vertical line, and try to forecast what is likely to happen today, in the future. You remember what I was doing before? 1, 2, 1, 2, 1, 2, 2 step forward, 2 step back. 1, 2, 1, 2. So this is it. The market is singing a sound similar to what I'm singing to you now, and sometimes we don't see it, but it's happening all over the place. It's happening all the time. So one can train oneself. I'm doing this exercise a lot now. Some traders like it, some traders don't like it. I recognize that I posted a video recently that I posted, I think, at 244S Trader YouTube channel, and I believe only one trader marked the video down. I believe that trader is probably a new trader. That's my deduction, and probably he watched that video and went to apply it, and probably was not successful with that trader. How, if that is you, do not give up. Try to go back and watch that video again. Okay, how to, something to do with eye wide open, blah blah blah. All right. So in order to use the past price action to forecast the future price action, one should train oneself. So some traders want to become advanced traders, and they are very interested in this subject. If you are not interested in market forecast, this is not for you. If you are not willing to give it a time, if you are somebody who want to just go and apply it with real money, this is not for you, because this is something that requires a bit of patience and a bit of mastery of the subject. Otherwise, if you just go, you'll be marking video down non-stop for no reason, which is not good for yourself. All right. So you look at this price action. Without too much long story, what myself looking at what has happened here, blah 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 blah, up to where that vertical line, it looks to me, we are talking about probability. This is where a lot of people get into trouble. They say, George, yes, last time you said it, it happened exactly as you said it. I will follow you. Don't follow anybody. All right. So there's a high chance that if this price start coming down here, it will be volatile. It will run fast. You see. So this stock, while looking at the past, it goes up. It's coming down very fast. It's quite volatile when it's coming down. See here again, volatile, running down very fast. See here again, very fast. You see all these kind of stuff. It's just dropping now. Here it was faster. Look at this session again. It dropped down very fast, volatile, dropped down very fast, volatile. Even this session here, it dropped down very fast, volatile. Now, why I'm saying this here? Now, you have to understand that when a pattern is completed, all right? So earlier we traded, we are marking this as a fast wave of a higher degree now, or a trending fast. This is a trending fast. All right. Now this is a flat correction that is being formed here. Can you see that? It's a flat correction. The 1, 2, 3 here is just move down. So now the rest is a bit messy, and we are expecting the C wave, okay, of that flat correction. The reason why there is a high chance that okay, it may be volatile is because this is the last portion of a pattern. So the last section or the last portion of a pattern is usually very fast. People recognize the pattern. Now they want to play the last bit of the pattern. Now some traders, this is quite convincing and it's very exciting. And some traders may say, oh George, that's correct. I'll go and sell. Don't do that. Look for trading setup on the edge of a key level and implement a top-down trading method without taking side. Anytime you want to buy, remember that you should be ready to sell also. That's the yin-yang, as a trader put it to me last time in the comment section. It's always the yin-yang in the financial market. All right? Be ready to buy and be ready to sell. If you especially when you are using a forecast, the mistake that people get into is that they take sides. So the forecast say the price will go down. So they only prepare themselves to sell. Or the forecast say we should buy. So everybody is more. It's just they just switch to the side of buying. No, always be ready to buy and be ready to sell. The yin and the yang. The same people that are selling are the same people that are buying. Be multi-talented, play both sides like a market makers. The market makers are supplying the sellers and the buyers. They don't care who is buying and who is selling. The market makers are providing liquidity for both because they are important for the market to move forward. So this chart that I'm looking at now, it's a high chart that, you see how you can, there's a high chart, you may see something similar. It may not do it at all. All I'm doing is that I look at the past and I'm making a deduction from the past to forecast the future. I'm using the past price action to forecast the future price action. Now, I know something or I observe something, I see a pattern. All I'm doing, I'm just acknowledging the pattern. I say, yeah, it happened like that before. It can happen. Okay, I'm just aware of it. And when it's happened, I'm ready for it. I prepare myself for it. It's like you see the forecast that tomorrow is going to rain now. If you are walking long distance, you're going to walk from A to B. If you have to do that, the next day what you do, you prepare. You take your umbrella, yes or no. You take your umbrella or you wear a raincoat or something like that. All right? So, or you take a different route where you don't get so wet. All right? So the forecast allow people to be prepared. That's all. All right. But suppose you didn't know that tomorrow is going to be too hot, for instance. Suppose that tomorrow the sea is going to be very hot, but you didn't know. But because today was so cold, it is cold now in London, by the way. So it's so cold today, and then tomorrow is going to be very hot. But you didn't know that tomorrow will be very hot. But somebody who observed the past know that tomorrow will be hot. So now, because you didn't know that it's going to be hot, you are still wearing your jacket, everything, you wear your scarf and everything, And the next day you're walking around, you look like a stupid person. People say, what's wrong with you? Take them off. All right, you see now? So the forecast allow us to be prepared, that's all. If the next day, for instance, they say it's going to be hot, very, very hot, but it end up being very mild, but you know that they say that it's going to be hot, you take your precaution, all right? But it's a little bit warm, it's just mild, yes or no? But a person that knows that tomorrow is going to be hot, if he's going to be a very wise person, can also prepare himself to be cold and to be hot. Why? For instance, sometimes the forecast can be completely hot. So there were days here in London, they say, tomorrow is going to rain, and everybody get ready for the rain, and the next day is so bright and beautiful, and they say, where is the rain? Nothing. You see? So, but if you only prepare for the rain, you may look stupid, isn't it? Yes or no? So be prepared for both sides. So when we are saying to traders, like I'm showing you, I'm speaking to new traders. The exercise we are doing here, we are talking to traders about how they approach a market forecast. A lot of traders receive a market forecast, but they don't know how to handle it, and they end up getting into trouble. And we don't want that. That's why I'm spending my time talking to you like this. If you're an experienced trader, all right, just understand it, okay? So they say hi each other, it may come down very fast. That's one because of the past, what has happened here before. You have to notice also in this session here, this probably look this session again. So you don't use one data alone to forecast the past. When you are using the past price action to forecast the future price action, don't use only one data. Right? So you observe that it was volatile. Anytime it goes up, it can be volatile. Try to find out, try to gather more information. That's what the algorithmic trading tools are doing. That's what the artificial intelligence trading tools are doing. They are not using only one data. They are gathering data, various data, and they are matching them, La fusion, they put them together, or melt them together in a melting pot, like a United States of America, the melting pot, and then they try to come up with something, that they can work with. That's what we are doing here. So like now I'm telling you that I look at this chart, the first thing that I spoke quickly, I say, what's going on here with this stock running down all over the place? So I say, look at this. It started now, you see here? That's the first reaction. So I'm saying, whoa. He may do it like this. He may just stick one finger up like this. Oh, all right? So he may not do it, but I'm prepared for it. All right? That's it. Another thing, so like I said, you don't use only one data. What test can we see here? Okay, all right. Yeah, you see, when up like this, 1, 2, 3. Yes or no? Is that correct? Or am I counting wrong? 1, 2, 3. After the 3 mode, what is it? Down. Now what do we see here? 1, 2, 3. Okay, this is not much. Okay, so let's call it 1, 2, 3. Now it came down. This one was not too volatile, but finally there was one stick down here. You see 3 more. So this stock is doing something like 1, 2, 3 a bit from this session, at least from 2009, 1, 2, 3 down, 1, 2, 3 down. So this part here, you see, 1, 2, 3 down. All right, 1, 2, 3. Are we going to do down again? So that's another information that 1, 2, 3 down, 1, 2, 3 down. Is it going to do the last 1, 2, 3 down again? So gather, try to spot many things in the past that were in play, that were happening, all right? There will be some patterns that are taking place all the time. Another thing that we can see also, you see now this retracement here. So these are statistics, all right? This is quant trading, all right? So for instance, we may say, all right, okay, so this stock, all right? If we are, you can see that from this section here, went up all the way there, yes or no, all right? A retracement after that trending fell brought it to where? In a 78.6% level between the 88, 78.6 and a 78.6% Fibonacci retracement. Call it 78% level. That's a deep retracement. So that's one observation. It's something that has happened in the past. No one can deny that. It has happened, is recorded. We can use it to have a bit of idea what is likely to happen in the near future. All right? As it went now from here to here, it didn't pull back to the 78.6% level. It stopped at 61.8% level. Okay, let's see. Put it here. 61.8% level again. All right. Let's put it like this from here all the way up here. Okay, so now it start going down from here. It went here now. If it start coming down, what will be the Fibonacci level that we must watch? Somebody may say because of the path, we can watch the 61.8% level. Will that be something reasonable one can try to figure out? That's the level there, 61.8%, because it did it somewhere here. One may also say, watch also the 78.6% level. So we can forecast that if the retracement start coming down very far, it can end up here at $21.85, corresponding to the 61.8% Fibonacci retracement of the move from here to here. And also maybe in the worst case scenario, it can bring it back all the way to the $15 zone, corresponding to 78% Fibonacci retracement level. And somebody may turn around and say to you, how do you know? And you may say, oh, I'm just using the past price action to forecast the future. Something has happened before, we gather those statistics, and we want to work with them. So somebody asks you, how was the price behaving before? So we are using the past behavior of a financial instrument to predict the future behavior of a financial instrument. And with that, right, you are not taking a side. You are just preparing yourself for a scenario. And if that scenario doesn't happen, the opposite may happen or something else may happen. So the best preparation will be prepare yourself for the forecast, but prepare yourself for the non-forecast. So the yin and the yang. So this is about how to use the past price action to forecast future price action. Will he do it? We will see. He may not do it. He may do it. And if he doing it, well, we have an edge. I hope you find the video also useful, and I will use a demo account to practice. Give it a time, because I told you more experience, and until you master it. And when you master it, then you can go live. All right? Any question, any suggestion, put it in the comment section, and in due course, I will be recording another video to answer your specific question. I need to remind traders that this is advanced trading using the past price action to forecast the future price action. Is a sub-subject, all right? Can we see that? A subject of the predictive fractal trading, all right? If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. Okay? If you think it's an essential tutorial that can help other traders, all right, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Before you run away, I have something to show you here. Previously, I recorded a video. I thought I'd talk about that video at the beginning of this tutorial. And this is one example here. I was talking about the dollar-yen. And I was comparing the dollar-yen, I think, to the gold US dollar. Was he? Where was it? Was it gold? All right. And one of those, and I was, because of what has happened in one session, I think it's something else, all right? Okay, by the way. And I was using the predictive fractal pattern. And I was telling traders about this candlestick bar. I remember some traders may remember that video, which I posted, I think, at 244 Trader. And I was telling them there is a high chance that this candlestick bar that you see here may close down like this. It did not happen. It did not happen. Now, how do you handle that? That forecast that I made. You see that candlestick bar, we were talking about it, and you say it's not yet closed, all right? But it has a high chance to go down. So when somebody says to you something is going to go down, especially they say to you candlestick bar is going to go down or close below, how do you handle that? You draw a line, okay, at a high and the current low. So if it goes beyond this low, it will become a new low. So the high that you go at that point in time and low that you have at that point in time. And you draw the median line of that candlestick bar. If they are saying that the candlestick bar will become bearish, you need to take bearish trend signal where below the median line of that candlestick bar. If they say to you it will close bullishly, you will take bullish trending signal above the median line of that candlestick bar. But in that video, I also mentioned to traders, this is a long discussion by the way, I was saying that because it went up before and then pulled back like this, the first intention of technical traders is to push it up. We were comparing it. What was it? I was comparing it. They look different now. This is what I was talking about before. Right? You see here, the gold, the US dollar went down. You see, it went down and it's oscillating now. All right, this is what was happening here. You see, oscillating here. All right, so we were comparing two different charts. One went down fast, the other one went up fast, but both were consolidating. All right, and I think it was this candlestick bar that was bullish at the beginning. It was bullish. And I said, why you see that candlestick bar? Because it's bullish. If the dollar is doing the opposite of this one, all right, there's a high channel, it will close below, it will go down, as this one was bullish first, but you see, it closed down near the median line, you see. So this is how you want to use the past price action to forecast the future price action. As I'm explaining to you, when it comes to apply the forecast and make a decision, it's a different matter, and it takes time, and with a bit more experience, you will become a more advanced trader that can use a price action to forecast the future. All right. So this will conclude our discussion today about how to use the past price action to forecast future price action. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to use the past price action to forecast future price action. Thank you for watching.